Good day, ladies and gentlemen, and welcome to the show this Wednesday, the 15th of December, 2021. Thank you for tuning in. Listen, I'm glad to have you guys here. Now, I'm going to talk about something this morning. It's of extreme importance. And it's another thing. Big, really big. Really, really big. Anyway, let's get started. Let's open up the charts right here. Take a look at what's going on. Well, in Antarctica, there's something that they call the doomsday glacier. It's the Thwaites Glacier. And it's roughly the size of the United Kingdom, or the same size as Florida, this glacier. It's starting to break apart. This is the problem. Now, why this is a problem is because it's going to start raising global sea levels. And you say, well, how long we got? We've got 3 to 5 years. Because this thing is starting to break apart. It says scientists with the American Geophysical Union warned on Monday that the Antarctic glacier the size of Florida is on the verge of collapsing. The Thwaites Glacier, dubbed the Doomsday Glacier, is roughly the size of the United Kingdom, and it dumps 50 billion tons of ice each year. For years, scientists have been watching the glacier, whose ongoing melting contributes to about 4% of yearly sea level increase. Its eastern part, which borders the undersea mountain, was assumed to be more stable, but new satellite photographs reveals fractures that are allowing rising ocean waters to accelerate its dissolution. In other words, it's melting really fast. We have mapped out weaker and stronger areas of the ice shelf and suggest a zigzag pathway the fracture might take through the ice, ultimately leading to a breakup of the shelf in as little as 5 years. But I've heard estimates of 3 years. And they're not quite sure how long this is going to take. But the estimates right now are between 3 and 5 years, which results in more ice flowing through the continent. Scientists said in the paper presented by the meeting of the American Geophysical Union, reported in India today. Now, here's the thing. The sea levels from this particular glacier, from what I understand, will rise about 2 feet. But once this glacier's gone, then more will melt in behind it, which will equal as much as 3 meters later, after. So this glacier itself is about 2 feet of sea level rise. Well, you say, well, Glenn, what's the problem? 2 feet, 2 feet. What ocean's going to rise 2 feet? Well, the problem lies in an awful lot of cities in the world were built near coastal regions, big cities. And some of them are not much above sea level. Like Vienna, you know, I mean, and a lot of other big cities like Miami, you know, New Orleans. I mean, these are just a few of the. I could go on and on naming cities that are built near the coast that are in some cases they're almost below sea level, like New Orleans, you know, and an awful lot of people live in these regions. So this is a monster of a problem. But it's not right away. It's not something that's going to hit us like tomorrow morning. It's something that's we're looking out here like 2, 3, 4, 5 years from now. This is going to be a monster of a problem. Now, another thing I want to talk about is the Fed. The Fed right now, they are awaiting the outcome of the meeting, but from what I understand, it's going to be extremely hawkish. They are actually talking about this taper. They're talking about, quite literally, if you can imagine, doubling the speed of their taper. And having it done, I think they said by March or something? Oh my goodness, you know? Now markets are already starting to sense that this party is over. The punch bowl's being pulled away. But that's the only thing that's been supporting this market all along. It's just the punch bowl. So what do you expect's going to happen? Well, we've already turned bearish on almost everything, almost all asset classes across the board. Turned bearish. Bitcoin's bearish, gold, silver's bearish. The markets are all bearish right now. Um, it's only central bank policies that buoyed everything up to where it is right now. And now all the central banks are going to take cue from the Fed, and they're all going to start to be hawkish and tighten. They're turning the screws. Basically, what we're talking about here is a three-legged table, guys. Okay? And they're planning on pulling one of the legs out from underneath it. What do you think's going to happen? Well, it's a big game of chicken, see? In the old days, they used to play this game, like, where they used to, two cars would come at each other, or whatever. And the first guy to swerve off, well, he would have to give his car to the other guy. They used to call that the game of chicken, they used to call that. But anyway, it's like a big game of chicken between the Fed, Federal Reserve, and the markets right now. Who's going to blink first? Well, I say that the Fed will blink, but the thing is this is going to get worse and worse very rapidly until somebody blinks and we get more money coming in. And, these markets are ready. I mean, they could go down. Everything could go down, like, so far that it could freeze the system. I cannot see them allowing that to happen. I think that they will blink first. The Fed will blink first. And I think that the problem with this is, though, that they've already created a tremendous amount of inflation, right? And to be honest, if they blink, if the Fed relents and lets up at this point, inflation's going to get out of control because the Fed is way behind the curve on all of this. Let's get in there and take a look at some of the prices of stuff going on right now. Let's take a look at the silver price today. And we're in a sharp downward spiral right now. It's breaking into new fresh low territory at 21.57. It's down 36 cents on the day so far today, just after we had that big fall. But you notice it always comes when when the COMEX is on. That's when we're getting these smackdowns. And right now we're right in the middle of one right now happening in real time. They have total control over the price of gold and silver using paper derivatives contracts. It's as simple as that. They have total control over the spot price. Now, I've said this for a while. I'm going to say it again. I truly believe that the rich people out there who have a lot of fiat currency have been waiting for something. They've been waiting to buy. This is why they haven't gobbled up all the silver. The physical I'm talking about. I think they've been waiting for something. I think this is what they've been waiting for a long time. And I think it's on now. It's on right now. And they're going to wait for the cheapest price. And they know. They know. They all know. But there's so much money behind the scenes. And we're talking about fiat currency behind the scenes, behind all of this, that when they gobble it up, it's just going to be one of those things where one day it's there and the next day it's gone. Poof, gone. Because there's so much, they have so much money. They've got billions and billions and billions and billions of dollars. And the silver market's a very tight, small little market. And of course, they're going to gobble it all up at the cheapest price. When the spot price gets down to the bottom, I can't tell you exactly, but they know where the bottom is. It's at 21.63 now. I don't know where the bottom might be. It might be $19. It might be $18. Where they can drive it down to using this COMEX and these paper short contracts. Before all of a sudden, poof, there's no physical silver available left. It's all gone. And I mean, we were in tight supply. I don't know how they were keeping it going, to tell you the truth. How they were supplying the market with physical. I don't know. But those supplies will have to be exhausted at a certain point, especially if you get big money starting to come in and allocating real physical silver. It's just going to go poof at a certain point. Anyway, let's take a look now at cryptos. 21.69. That's in billions. So that'd be 2,169,000,000,000 for the industry. Let's refresh the page. 2150. So it's going down right now. It's lost, was it, a few billion just in the past few minutes since I've been watching the charts. We're looking at a Bitcoin price of 47,299. I think with Bitcoin, I think you're buying opportunities coming too, and I think the rich are keeping their eye on that one too. Except it would take more money to push it than it would the silver market. You know, take a lot more money, a lot more of the bigger money to push the crypto. But they can come in behind it and they can push it up to unheard of heights. Wouldn't be out of the question for $500,000 for Bitcoin. That's not out of the question. The question is how low is it going to go during this bearish sentiment right now before we see this big turnaround? And by the way, guys, when the Fed loses this game of chicken, hyperinflation's on now. It's in the cards once they lose this game of chicken that they're playing right now. Let's move on and take a look at the Dow Jones Industrial Average. Down 114 points. This bearish action is going to continue. It's going to continue until the Fed relents. In other words, until they lose this game of chicken. Okay, let's take a look now at crude oil. 70.08. See, you know, why I'm saying the Fed's going to lose this game of chicken is these markets don't have a bottom. Everything doesn't have a bottom because the whole thing is all credit. And, you know, all what you call money you got in the bank and everything's all credit. And deflation insists that all of the credit gets paid back. And right now, the whole system is just all credit. And so all the money would just basically evaporate at a certain point. It goes to money heaven. Quite seriously, because they call it fugazi, the money, you know. It's just like, what is it? It's like, it's all debt. And the opposite of debt is when you pay debt off. When you pay debt off, the credit disappears. And when that happens, the money disappears. So that's deflation. Inflation is when they just keep this credit line going and they keep expanding the credit bigger and bigger and bigger until at a certain point the money becomes worthless. So these are two polar opposites of each other. And right now we're moving toward the one called deflation. We're moving toward deflation right now because of the Fed's tight policy. But deflation doesn't know where to stop. It doesn't know where to draw a line. Everything will keep falling until they support it. And that's this game we're playing. And at a certain point, they're going to have to support it. The further they let this drop, the bigger the support's going to have to be to bring it back up again. So that's where we're going with all this. Move index today, 78.98. It's down 2% on the day so far. No, it's down 3.2%, but 78.98. So it's not too bad right now, move index. We did have a couple peaks here where it touched 90. You know? But the thing is this can shoot up overnight. That's why we keep our eye on it. Take a look at bonds. Bond yields are still incredibly low, but they're moving up today a little bit, marginally. 10 years at 1.44 and the U.S. 30 years at 1.83. And now we're going to take a look at the U.S. dollar index. And the dollar is starting to rise today. It's starting to rise right now. And this does not surprise me a bit, considering the action taken by the Fed in this Fed meeting. Thank you guys for listening to your show. Like and subscribe. And we'll catch you guys in the next episode. Bye-bye.